All right, welcome to Financial Revolution Radio, where we give you straight financial talk. No, we're not pulling any punches. We're going straight to the sources here and valuable information for you. There's so much going on. Let's dive into today's show. I want to share with you, we're talking job numbers. Last Friday, unemployment numbers came out far better than expected, basically just blew the numbers away. And we need to go into a little deeper dive into this because clearly around the world, let me take my photo image off of there. Here's what's happening around the world. UK consumers, retailers hit hard by the lockdown. It says it here, the scale of coronavirus's impact on UK consumers is becoming clearer just as the lockdown is starting to ease. Brightons drastically reduced spending last month after about a third of families experience, one out of three, 1/3 of families experienced a loss of income. Reports on Tuesday's show. Those in trouble with debt. Here's the problem, my friends, and this is how it's going to get worse. Those in trouble with debt are borrowing more money to stay afloat, while shops are waiting to see how business will bounce back. This is the situation that we find ourselves in. We're compounding debt upon debt, and that's exactly what we don't want to see happen. We don't want to compound debt upon debt. We want to compound interest upon interest. That's how you do this in terms of having financial freedom. This is Financial Revolution Radio. I'm your host, Jaden Sterling, and I'm super happy to be here with you today, June 8, 2020. Whew, what a year it's been already. We need to look at what exactly is going on in the economy and how best to navigate this market, because we're clearly seeing two different things going on here. We've got a robust financial stock market booming, literally booming, ready to make new highs. It's mind-blowing. And yet we've got a crippled economy in the United States and North America. 40% of all workers who earn $40,000 or less are unemployed. Paycheck gone. Unemployment may be kicking in, but it's slow. There's nothing fast about this unemployment thing kicking in. But interestingly enough, look at what's going on. Can we see this? Bankrupt Hertz stock soars 170%. So here we go. We can take a company that files for bankruptcy and the stock goes up 170%. There's nothing normal about this investment environment. Nothing normal. Yes, granted, in bankruptcy, when a company files Chapter 11, it's a reorganization process. They reduce the debt on their balance sheet. They get better terms for their debt. But the reality is people still aren't traveling like they used to. If you're looking or considering investing in any type of airline company or travel company or rental car company, a cruise ship company, stay away from those stocks. These are what's called a falling knife. A falling knife is like trying to catch a knife that's falling. Would you do that? No, of course not. You wouldn't. So stay away from these companies, even though they may look appealing because they've gotten beaten up so bad in terms of stock price. I guarantee you, the minute this market turns back around and meets reality, we're going to see continued declines in this market. Been saying all along, keep your cash on the sidelines. Keep your cash on the sidelines. Cash right now is king and queen until we find ourselves in a negative interest rate environment. And that's when the Fed goes in, charges the bank additional dollars to lend to banks overnight. And then in return, the bank takes money out of your account for the privilege of you holding cash with them. That is not a good situation. We certainly don't want to see that. But that alone, my friends, I think can drive the stock market even higher because people say, I don't want the bank going in and taking money out of my account. So that, then they have to find a safe haven for it. Where is it? It's either stocks or bonds. Forget bonds. They're one of the worst investments you can make right now. At this low interest rate environment, the only play right now is stocks. Specifically, solid dividend paying stocks. When I said to you earlier in the show that compounded interest is key, that is how you compound your investment, is you buy solid dividend paying stocks and you reinvest those dividends. That is one of the few things that doesn't cost anything to do, is reinvest dividends. It's done for free and you get the best price of the day that dividend is paid to buy additional shares. So let's keep going in the news here. Let's talk unemployment. Here's the number. It's mind-boggling. The total non-farm payroll employment rose by 2.5 million in May. It's laughable. It's laughable. Because it's like, are you kidding me? How did that happen? Well, this is from the Bureau of BLS, Bureau of Labor and Statistics. .gov, and essentially what they said was 10% of those numbers are in the field of dentistry, which I don't know, doesn't make a whole lot of sense, because I don't know any dentists that were open in the month of May other than those that were fielding emergencies, and those were very few and far between. So we need to look at these kind of funny numbers and take them with a grain of salt. It is clear the market manipulation is going on. And here's why. I'm going to lead you right into the absolute next important thing to talk about, which are stock buybacks happening all over. The top company is Apple. 50,000 additional shares that they bought back. Let me see if I can get this whole thing on a screen for you. Apple. Here it is, 50,000. Apple Inc. bought back additional $50 million in stock that they bought back, 50 million. Followed by Oracle, then Twitter, and we go down the line. EMR, Emerson Electric Company. So essentially let's put all this in perspective. What happened was February, right around the 12th through the 19th, market dropped to mid-March, a 3-week drop of nearly 36%. So very quick, sharp decline in the stock market. All these companies then said, hey, our stock's on sale. Let's just go ahead and buy back more shares. Not only that, they're using government money to buy back shares. So all that money that was put in, the trillions into the United States economy, the billions into Canada, has been used by these large corporations to buy their shares back. Wouldn't you know, something strange happened since the middle of March, March 19th to be exact, when the bottom of the market was, until now, June 8th, the market is just about up another 40%. So all of those losses quickly rebound, and all of the shares that these companies bought are now worth almost, in some cases, double what they were on March 19th. So if this isn't fraud, I don't know what is, quite frankly. I'm 30 years in this market as an investor, professional investor, worked for Merrill Lynch and Citigroup during the decade of my 20s, and I have never in my life encountered anything like this. I know you haven't. This doesn't look anything like the previous declines. A lot of the previous declines were V-shaped recovery, meaning the market bounced back very quickly, but it had some fundamentals there. Never has there been a time in history where a third of people have lost their income and have literally stopped spending money. And with so much social unrest, for this market to be at this level makes zero sense. Don't get caught up in the FOMO, fear of missing out. I'm going to continue to repeat, keep cash on the sidelines. If you want to invest, only invest in a way that you do what's called DCA, or dollar cost averaging. Simple strategy. Every single month you buy the same stocks with the same amount of money, and therefore it doesn't matter if the market is up or down. In a down market, you're going to end up buying more shares. In a high market, you're going to end up buying less shares. No big deal. At least you're not timing the market. That is the only way to invest in this type of market. My friends, I'm Jaden Sterling. You're listening to Financial Revolution Radio, and I'll see you in another week. Have a great week, everyone.